In this video, we're going to be taking a look at the 2007 incomplete records question, which is an incomplete A, and it is for a sole trader called P. Lynch. Okay, so it says on the 1st of the 1st, 2006, P. Lynch purchased a business for $590,000, which included the following tangible assets and liabilities: premises, €560,000, stock, €19,000, debtors, €12,000, 3 months premises insurance prepaid, €1,600, trade creditors, €18,200, wages due, €2,600, and cash, €200. During 2006, Lynch did not keep a full set of accounts, but was able to supply the following information on the 31st of the 12th, 2006. Cash payments, lodgements, €116,000, general expenses, €73,800, purchases, €105,200. Bank payments, furniture, €14,000, creditors, €38,800, light and heat, €5,400, interest, €2,250, annual premises insurance premium, €6,800, delivery van, €28,400. Bank lodgements, debtors, €61,000, cash, €116,000, dividends, €3,000. Each week, Lynch took goods from stock to the value of €150 and cash, €200 for household expenses. Lynch borrowed €180,000 on the 1st of the 9th, 2006, part of which was used to purchase an adjoining premises and residence costing €155,000. It was agreed that Lynch would pay interest on the last day of each month at a rate of 5% per annum. The capital sum was to be repaid in a lump sum in the year 2015, and to provide for this, the bank was to transfer $1,200 on the last day of each month from Lynch's business bank account into an investment fund commencing on the 30th of the 9th, 2006. Lynch estimated that 25% of the furniture, 20% of interest payable for the year, and 25% of light and heat used should be attributed to the private section of the premises. Included in the assets and liabilities of the firm on the 31st of the 12th, 2006 were stock, $16,400, debtors, $20,200, trade creditors, $30,400, cash, $400, electricity due, €480, and €25 interest earned by the fund to date. So you are required to A. Prepare with workings the trading and profit and loss accounts for the year ended 31st of the 12th, 2006. B. Show the balance sheet with workings as at the 31st of the 12th, 2006. C. Part 1. Explain the term accounting concept. Part 2. Name 2 fundamental accounting concepts. 3. Illustrate an accounting concept applying to the accounts of P. Lynch. Okay, so we'll get started. So just to let you know, incomplete records questions, they are basically just a sole trader final account. Okay, but it's for a sole trader that is not able to keep their own books. All right, they have issues keeping their own books. Maybe they are too busy. Maybe they are, just not able to do it, right? So they are just firing all the information together. They're not keeping T accounts. They are not, looking at any, trial balance. They're not making a trial balance. They're not able to do the final accounts from that. So we have to be able to do that now, okay? So you can see there, it's a very simplified version of TPL and the balance sheet. So what we're going to do, you're just going to do the layout of incomplete records question first, okay? So you can pause that and jot down the layout of the sole trader final account if you wish, okay? And then we'll move on, okay? Okay, so smart people generate business, sales, purchases, goodwill, and bank. All right, so we're going to do sales first, and what we're going to have here is we're going to have to look for, every time we see the word cash And then every time we see the word debtors. So debtors are our customers that we sell to on credit, which means buy now, pay later. And it is it's going to contribute to our overall sales figure. But our cash, why are we looking for cash? We're looking for cash because if you can imagine a sole trader receiving cash, right? So every time that they get cash, it must be from sales. So every time we see cash, there must have been a corresponding sale. All right. So if we had cash at the start of the year, that would relate to sales from last year. So we are going to minus that 200. The next time we see the word cash is in cash payments there. And we have lodgements 116, general expenses 73,800 and purchases 105,200. So we're just going to add all three of them. The next time we see the word cash, it's in the bank lodgements section, but we need to realise that that is the same 116,000 as before. Okay. Next, we have drawings of cash 200. So each week they took 200. So 52 multiplied by 200 is 10,400. Okay, so 10,400 is the drawing. So we're going to add that as well because they had to make that cash in order to be able to take that cash out. Okay. And then we have cash at the end of the year, 400. So we made that as well. So we add that 400 also. Then moving on then to credit sales. So we're looking for the word debtors. We have debtors at the start of the year, which would relate to debtors from last year. So we're going to minus the 12,000 there. Then we have debtors in our bank lodgements. So we're going to add that as well. Then we had debtors at the end of the year, 20,200. So we're also adding that. So you can see there we have 9 figures relating to our cash there. Totting up altogether 374,800. So 374,800. So we can fire that up into our sales. So 374,800. Next then we have purchases. So cash purchases, we're just looking for the words cash and purchases. So in the cash payments there, you can see they have purchases 105,200. Now credit purchases then, that's all about creditors. So we're looking for the word creditors. So up at the top of the question, we have trade creditors at the start of the year, 18,200. So that was creditors from last year. Okay, so creditors from last year. That is relating to last year. It does not relate to this year. We are going to be taking that out of this year's trading profit and loss account. So it's not going to be included in the purchase figure for this year. Next time we see creditors is there in the bank payments, 38,800. Next time we see creditors then is at the end of the year, 30,400. Then we have drawing. So when a sole trader takes stock from a business, okay, that is going to be taken away from the purchases figure. So they took goods from stock to the value of 150. So 150 multiplied by 52, 7,800 euro. So it's taken away from the drawings there. That is altogether total purchases 148,400 euro, which goes into our trading account, 148,400. Now, next is goodwill. So goodwill is the established reputation of a business. Okay, so we buy a business and you know, there could be a good reputation of that business, which is why you might pay more for it. Okay, so somebody has run a business for 20 years. They've got loads of customers. Their books are always gorgeous. There's loads of profits. You buy it from them. Very likely you're going to be paying for the reputation of that business also, which is an intangible fixed asset and it's called goodwill. So we're going to look to the paragraph at the top. So on the 1st of 1st 2006, Lynch purchased a business for 590, which included the following tangible assets and liabilities. So premises 560, that is an asset. Stock 19 is an asset. Debtors 12 is an asset. 3 months premises insurance prepaid is an asset, trade creditors is a liability, wages due is a liability, and cash is an asset. Okay. Now, so what we do here to work out the goodwill, we tot up the sum of the assets, which you can see there is 592,800. And then we tot up the sum of the liabilities, which is 20,800. From the assets, we take away the liabilities of 20,800 and we get 572,000 euro. So 572,000 euro is the assets minus the liabilities. We compare that to the 590 that you have paid for the business. So the 590 is what was paid for the business, and so we subtract the 572 away from that, and that is 18,000 euro goodwill, which is our intangible fixed asset at the top of the balance sheet. Next then we have to do the bank account. So the bank account we have to do it big T account, money in, money out. Okay, so we're going to look just at the bank, everything that has got to do with the bank, any money in, any money out. So we'll start up the top, and it's basically just a case of scanning, okay? So start of the year, it said P Lynch purchased the business for 590, so that's 590 in, 590 out. All right. Then we can see the bank payments later on down. So furniture 14,000, creditors 38,800, light and heat 5,400, interest 2,250, annual premises insurance premium 6,800, delivery van 28,400. Then we have bank lodgements 61,000, cash 116,000, and then dividends 3,000. Then the next time we see cash, it is in the next couple of paragraphs there. Lynch borrowed 180, so 180 in, part of which was used to purchase an adjoining premises and residence costing 155. So that 155 is money going out. Now, what we have to do then is we have to tot up the total of both sides, and we need to see which is the bigger side. So the bigger side in this case then is the debit side, 950. So what we're going to do, we're going to just write 950 in both sides. This side equals 950, but this side currently doesn't equal 950. So what we're going to do, we're going to find out, right, what do we need to put in here in order for that side to equal 950. And if we take out our calculator and work that out, we would have to add 104,550 euro, okay, to that side to make the two sides equal. And then we bring that down then on the debit side. So that is 104,550, which is on the debit side. So that makes that a balance sheet current asset. Okay, so that 104,550 is going to go into the current assets there in the balance sheet. So bank 104,550. Okay, so that is all of your Smart People Generate Business stuff done, and then you can move on to the rest of the question. So we have loads of marks got at this stage, and the reason why it's good to get these done at the start of the question is because you can then go through the rest of the question, and if you spot anything else relating to sales, purchases, goodwill or bank that you missed out, you know, you can go back and amend the figure. So that's really good. Okay, so looking at the question then, I would suggest that we go to the last paragraph and do that one first. So it says here, included in the assets and liabilities of the firm on the 31st of the 12th, 2006 were stock 16,400, debtors 20,200, trade creditors 30,400, cash 400, electricity due 480, and €25 interest earned by the fund to date. Okay, right. So I suggest that you do this paragraph first because so many students put in the wrong closing stock figure, the wrong closing debtors figure. They use the figures from the start of the question in their balance sheet, and so I just want to prevent that from happening. So we will take a look now. Okay, so stock, so closing stock 16.4, that's going to go into the trading account, and it's also going to go into the current assets. Debtors is going to go into the current assets. Trade creditors is going to go into the creditors minus 1 year. Cash will go into the current assets. Electricity due will go into creditors minus 1 year. And if I have electricity due at the end of the year, that means that I have used that electricity during that year. So I have used that electricity during that year. I am going to add that to the expenses in the trading profit and loss account. Right, then I have €25 interest earned by the fund to date. So €25 interest earned by the fund to date. We've got investment income then for the year that is there, okay, in the trading profit and loss. And then it's going to also be up in the financial assets. So that's also going to be in the investment fund, €25 there. So that's the last paragraph done. Now we can go to the top of the question and look at all the other assets and liabilities that we can put in. So on the 1st of 1st, 2006, P. Lynch purchased a business 590, which included the following tangible assets and liabilities: premises 560, stock 19,000, debtors 12,000, 3 months premises insurance prepaid 1,600, trade creditors 18,200, wages due 2,600, and cash 200. Okay, right, so let's get started. So they purchased a business for 590, that is capital. So capital is 590 there. Now, it included the following assets and liabilities. Okay, so premises 560,000 goes into the tangible fixed assets there. Stock 19,000, that goes into the opening stock. Debtors 12,000. That's not going in because we already have our debtors from the end of the year, so we don't need that. 3 months premises insurance prepaid. So that is premises insurance for January, February and March of this current year, okay, which is 2006 year. Okay, now this says to me that we would have paid insurance for a full year. Okay, so we pay for a full year. We don't pay it monthly. Now, if we have insurance for a full year paid and we have 3 months prepaid at the start of the year, we are going to have 3 months insurance prepaid at the end of the year also. So 3 months insurance prepaid at the end of the year there too. Trade creditors, we are not going to be putting that in because we have used our trade creditors figure from the end of the year. Wages due at the start of the year. That relates to wages from last year. So we are not going to be including that into this year's books, okay? So we are going to be minusing that from this year's books. So the wages, we're going to be taking that out of the general expenses. So minus €2,600 there. And cash 200, we're not going to be using that either because we have the cash from the end of the year. So lots of students mix up the cash from the start of the year and cash from the end of the year. Okay. Next then, cash payments. So we've got lodgements, we've got general expenses and we've got purchases. So we're not going to look at the lodgements and purchases again because we've already dealt with them. We've got the purchases figure, we've got the bank figure, and we've got the sales figure. We don't need that anymore. So the only thing we have to do there is general expenses, 73,800, which is going to go into the general expenses. So we're just going to add that there to the minus 2,600 we already have. Okay, then we have bank payments. So we have furniture, creditors, light and heat, interest, annual premises insurance, delivery van. Okay, so you can see there, creditors, we've already got that done. We've already got that down. So we do not need to put that in again. All right, we use that to work out our purchases. So furniture is going to go up into the tangible fixed assets. Creditors were not using it. Light and heat, adding the 5,400. Interest 2250. Now that is the interest that has been paid. Okay, so we are not going to, that's how much we have paid. We'll be coming down and seeing how much interest we have to do for the year when we come across the bank, the loan part, and we'll calculate that then. But we are going to have loan interest due. So we'll work out how much it is for the year later. But if we minus 2250, we're going to know how much loan interest is due. Okay. Now, then we have annual premises insurance premium, 6,800. So we're going to add the 6,800 here, but then we're going to take away the insurance January, February, March for next year. Okay, so we already had January, February, March of this year prepaid. So we had 3 months here. So we just need to put in the 9 remaining months for the current year, and we need to put the 3 months prepaid over into the balance sheet. So the insurance this year was 6,800, and so 3 months of that then is 1,700. So you can see the insurance at the start of the year was 1,600, end of the year was 1,700. So that is, you can see insurance premiums change. All right, insurance premiums change. They do not stay the same. All right, they do not stay the same. So what you have to remember is insurance and rates can change, and they try and catch you out in every question with those. Delivery van then is our last thing, 28.4, which will go up into the tangible fixed assets. So 28.4 up in the intangible fixed assets. So that is that paragraph done. We'll move on to the next one. So bank lodgements. So you can see we have debtors, we have cash, and we have dividends. So it's important to note that we've already dealt with the debtors and cash when we were working out the sales figure. We do not need to use this again. Okay, so we're left with dividends. Now it's very important at this stage to note that we are doing incomplete records for a sole trader. So a sole trader who does not keep on top of their books, okay? They do not keep proper set of books, and they do not have shareholders. They are a one-person business, okay? They do not have shareholders. They do not have anybody invest in the company. So a lot of students, I would say, treat these dividends, they would take it away from the net profit in the trading profit and loss. Remember, this is not a company, so there is no dividends being paid to shareholders here. So that would be incorrect treatment of that. You can see that this is bank lodgements. So, bank lodgements is money going into the bank. So P. Lynch put this 3,000 into the bank, and it was dividends. So P. Lynch must have had investments in another business personally, and now he or she is putting that 3,000 into the business. So they are investing that 3,000, and that is going to be capital introduced. So add that to your capital figure there. Next, we have each week Lynch took goods from stock to the value of €150 and cash €200 for household expenses. So that's going to be drawings, and already we have worked out the purchases part of this, and we've also worked out the sales part of this. So all we have to do now is tot that into the purchases. So that's one of the benefits of doing your sales, purchases, goodwill and bank first. You only have to worry about the other entries of it now. So into the drawings, you've got 7,800 and 10,400. Next paragraph. So it looks like a lot, but we just break it down bit by bit by bit. Okay, So here it says Lynch borrowed €180,000 on the 1st of the 9th, 2006, part of which was used to purchase an adjoining premises and residence costing €155,000. It was agreed that Lynch would pay interest on the last day of each month at a rate of 5% per annum. The capital sum was to be repaid in a lump sum in the year 2015, and to provide for this, the bank was to transfer $1,200 on the last day of each month from Lynch's business bank account into an investment fund commencing on the 30th of the 9th, 2006. Okay, so there's a lot happening there. We're just going to break it down bit by bit by bit. Okay, so the first part there, Lynch borrowed 180,000. So that 180,000 is going to be a loan, which is a long-term liability in the Finance I, and it's going to be repaid after more than 1 year. So creditor amount falling due after 1 year. So part of which was used to purchase an adjoining premises and residence costing 155. So we're adding the 155 up to the premises there. Now, next sentence, it was agreed that Lynch would pay interest on the last day of each month at a rate of 5% per annum. So the loan was 180 and they borrowed it on the 1st of the 9th. So they would have had it for the 9th, 10th, 11th and 12th month. So 4 months. And it was at the rate of 5% per annum. So we're going to put the loan interest down at the bottom of the TPL, 180 by 5% by 4 over 12 months, and that is €3,000. And remember, we will more than likely have loan interest due at the end of the year. So you saw previously in the question we had paid, or P Lynch had paid 2250 loan interest. So we have €750 loan interest due then. Right, next, the capital sum was to be repaid in a lump sum in the year 2015, okay? And to provide for this, the bank was to transfer 1200 on the last day of each month from Lynch's business bank account into an investment fund commencing on the 30th of the 9th, 2006. Okay, so we already have the bank done there, but they were to provide 1200 the last day of each month. Okay, now Lynch borrowed it on the 1st of the 9th. So again, we're going to have the 9th, 10th, 11th and 12th month. So that is 4 months by 1,200. That is €4,800, which is going to be transferred into the investment fund. And again, that's from the bank, but we already have the bank figure completed there, 104,550. So that is that loan paragraph done. Not usually answered very well by students, but just take it bit by bit by bit and just see how you go. Okay, next we have Lynch estimated that 25% of the furniture, 20% of interest payable for the year, and 25% of light and heat used should be attributed to the private section of the premises. Okay, so this is drawings. So we will start it off. So 25% of the furniture. So the furniture up here was 14,000. So 25% of that, 3,500. So we take the 3,500 away from the furniture and we add the 3,500 down to the drawings. 20% of interest payable for the year. So the interest payable was 3,000. Multiply that by 20%. We're going to have 2,400 in the TPL and we're going to add the 600 then to the drawings. And then we have, last but not least, 25% of light and heat used should be attributed to the private section. So 25% of light and heat. So our light and heat here is 480 and 5,400. And so multiply that by 25%, we're getting 1,470, which we're going to take away from the light and heat. So overall you'll have 4,410 in the TPL and you'll add your 1,470 to your drawings. So that is then all of the workings done. You have put in absolutely everything into your question. What you have to do now is you have to just start totting things up. Okay, so when you add everything up, you're going to get your final solution should look like this. So remember, this is incomplete A, so we're doing this in the traditional way, like we do other TPLs, like in question 1, okay? So you're working down and you're just totting everything up as per usual, then you're taking your 139,155 over to your balance sheet and then just completing that as well. So next you have your little bit of theory. So see part 1 said, explain the term accounting concept. So accounting concepts are the accounting practices or rules that are applied in the preparation of financial statements. Part 2 then said, name 2 fundamental accounting concepts. So here we have accruals, going concern, consistency, and prudence. Number 3 then says, illustrate an accounting concept applying to the accounts of P. Lynch. So here it says, all expenses incurred in a particular period must be included in the accounts of that period, regardless of whether they are paid or not. Similarly, all revenue must be included in the accounts of that period, whether received or not. For example, electricity due for the current year must be included in the accounts, although the bill may not be paid until the following year, as the expense refers to the current year. Insurance prepaid should not be included in the current year's accounts, as the payment refers to the following year. So that is the 2007 P. Lynch Incomplete A question complete.